Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we are coming at you on Thursday morning, the 6th of September. We are going to do what we do each and every day, take a look at the potential breakout trades and turning points of our 10 to 12 futures markets before heading into our live trading session this morning, for those of you that are going to join us, at 7 a.m. Central Time. So let's go ahead and dive right in. Going to do a fairly quick one today because we've got the live trading room coming up soon, and I got... frankly, limited time. So let's start with the ES. On the ES yesterday, I talked about this area down here being a potential reversal point. Now, looking at that reversal point, what do we notice? We notice that it's got a dashed line. And why do we have dashed line trades? Because we don't feel super confident in the level itself. And what happened yesterday with the level itself is exactly why I put those styles of trades into my trading plan, because we went right through the level. Now, if you notice, there's this long wick that comes down. But if I go to a smaller time period, you'll be able to see that, actually, it's still a pretty long wick. Hold on just a moment here. Let's go to a 5-minute. There we go. We go to a 5-minute, and the reason I'm going to a 5-minute is really, I don't really trade off the 5-minute, but I want to use it to show the detail. So the trade is activated halfway through the level. So call it 28.82 half. Well, price didn't activate the trade until here, and then it kept going down, which means that it invalidated the use of the level, okay? Now, by invalidating the use of the level, what we've done is that we have made it so that this trade should never even have been something that you enter, because you're not breaking any of your trade rules when you enter those positions. Now, in the overnight hours, we've actually gained a little bit of momentum. We have not yet put in a full higher swing high. We did put in a slightly higher swing low, although this could just be considered chop and consolidation. So there's nothing I'm going to add at this point. Was tempted to add a short, but I'm not quite there yet. Looking at the Nasdaq, we also have been basing. I did yesterday say those of you that were interested could take a short below this area here on a breakdown. I was not willing to do that. I kind of felt like I was not comfortable taking the short, and so I did not. And so we left this thing kind of be, because we're too close to that all-time high. Now, a lot of this was really on what happened yesterday with our social media stocks, Facebook and Twitter, facing a whole backlash and a whole hot mess. Here's Facebook's stock yesterday after the gap down and the continuous move down. By the way, for those of you that are in the in the trading room, this was one that we looked at last weekend on our weekend edition. So those of you that caught that short, you're still in it. You're doing pretty well. But Facebook and Twitter both took a really, really hard hit yesterday, right at the open, based on what was happening, if you will, on the hill. But what we have for today in the NQ, we still got some levels down below us where we have potentials for reversals. Now, this level here, we almost got into it and we're unable to get our order filled, which makes it a slightly lower probability. So I'm going to switch this as well now to a dashed line trade. Crude oil. So in crude, still off of this short up here, price is continuing to move down. I think we may have another opportunity for a breakdown in crude below this area right here. Based on the current current price. So taking a look at this area here for a potential breakdown in crude. And then gold, we actually rallied back up, but nothing really to add yet on gold. We are in what looks to be a potential reversal candlestick right now at a pretty close reversal area up here, but I'm going to leave that one be as at the moment. Into bonds, currencies, commodities, all that fun jazz. In the 10-year treasury note, we've come really close to our original our level here. We touched it and moved away. However, it did not activate because we set this up as a dashed line style trade, which means that we're still waiting on activation for this one. I don't really like it at all at this point, so I may actually, if we don't come into it today, I'll probably be looking to remove that level as an opportunity. Yesterday in the Aussie, we talked about a potential breakdown below this 71 area here, rallied up off of it, came back to it overnight, and used it as support, which makes it a better breakout candidate. So still waiting on the breakout in the Aussie. In the euro, I got to get rid of these levels here. I talked about them yesterday. Both levels meeting entry. And now, let's see if we actually just get a bounce off of what was old resistance becoming new support and continue to trade higher. I don't have a whole lot I want to add to this at the moment, so I'm not going to force anything. Nothing sticks out. Oh, the Canadian. So here I've got this level right there on the Canadian dollar. I'm going to go back to a 4-hour chart and really look at the origin of this level. I'm not a huge fan of the way that we're chopping around in front of it. You know, I got to go pretty far back to see that area. Let's go back and see what that level looks now. So it looks like a pretty clean level. And then the one below it is, so look, we have a little bit of sideways basing after a pivot low. That's what created the first level, and that level worked really well, right? We bounced off of it and rallied for a long time off that level. So now we've got another basing after a parabolic move up. My thing I don't like is the way that we're chopping around in front of it. So use your own rules on how you normally trade this style. I don't like this basing in front of the level at all. I will tell you that. So I'm gonna be a little cautious on the arrival in this. Move it to a dashed line for now, and it may very well just completely come off my radar depending on the arrival. All right, last but certainly not least, Great British Pound, Japanese Yen took a little bit of a hit yesterday in a pound level. Price rallied up to the origin of our move down. After we got this entry and price moved nicely off of there. So those of you that participated in that one, you did really well on the long, and then if you took the short, then we got stopped out on the short as it hit that area and just blew right through it, came to the gap fill, and then the gap acted kind of as a price magnet, if you will. So the long worked out, the short did not. By the way, I'll take a loss of this distance if I've already taken a nice gain of this distance any day of the week, right? That's any day of the week and twice on Sundays. And that's really what I talk about in trading in general. Talked about it yesterday with the gold and oil trades. Here's one on the exact same asset class for those of you that are doing it, right? Short, smaller losses, bigger wins. All right. Japanese yen, nothing really happening. Copper, we could reach this level today as we just got an overnight pop. And I don't love what nat gas is doing. So nat gas looks a lot like nat gas's consolidation's looking a lot like the Canadian dollar right now. So I'm going to turn this thing off for this morning. Those of you that are on the live trading room, we will see you at 7 a.m. Central in about 2 hours. And those of you that aren't, go to tradersarmy.com, learn a little bit more, and we'd love to have you join us. All right, everybody, talk to you soon.